Hi, we're back with another episode of Ask an Actuary today, and joining me is Luke Matchett, an actuarial consultant here at Odyssey Advisors. Today, we'll be going over something pretty important in the 401k world, non-discrimination testing. So jumping right in, Luke, what's the purpose of non-discrimination testing and why is it so crucial for your 401k plan?
Yeah, so non-discrimination testing was developed by the IRS as a way to make sure that all employees in the plan are treated fairly. And really what this means is making sure that, business owners and highly compensated employees aren't being favored in any way compared to those that aren't making as much money.
And what exactly makes somebody an HCE or highly compensated employee?
Yeah, good question. So an employee is considered a highly compensated employee if they either owned over 5% of the business or earned over $155,000 during the previous year. And if an employee doesn't meet those conditions, then they're just considered a non-highly compensated employee.
Gotcha. And can you go over the different non-discrimination tests a 401k plan needs to pass each year?
Yeah, so there's two main tests. There's the actual deferral percentage test, which is looking at how much employees are contributing to their retirement accounts each year, and the actual contribution test, which is looking at how much the company is contributing towards these retirement accounts. And so the rules for both of these tests are the same, and that is that the average for highly compensated employees can't exceed the lesser of 2 times or 2% higher than the average for non-highly compensated employees. And so, for example, if non-highly compensated employees are contributing 4% of pay into their account, then highly compensated employees can't contribute more than 6%.
And finally, what happens if your plan doesn't pass testing?
Yeah, so it's not the end of the world. Plans do, fail testing, but it's important that corrective actions are taken to obviously fix that. And so 3 common actions are returning excess contributions made by highly compensated employees or putting a limit on the amount that highly compensated employees are contributing. And the other option is to make excess contributions, or rather make additional contributions on behalf of non-highly compensated employees. And again, so all 3 of these actions that you could take are, again, just trying to make sure that those percentages are passing the test rules. And, if you have a plan that is, struggling to pass testing, year after year, you may want to consider a safe harbor plan, which automatically passes non-discrimination tests.
A huge thanks to Luke for coming on today to talk about non-discrimination testing. And for those of you watching this, if you have any other burning questions or topics that you want to see maybe covered in future episodes, just drop us a message or leave us a comment down below. And until next time.